Let's talk about a few of those other names that gave us reports from last night and this morning. Diane King Hall joins us from New York. One big winner in tech this morning, Diane, is F5. Yeah, breaking out. Was already up a ton the last year. Kind of a quiet little mega winner within the data center security, like software play. Tell me about it.
Yeah, I mean, to me, this was a sleeper hit. They beat expectations, as you know, on both the top and bottom line, and their forecast looks good for F5. So you are seeing shares move higher. They are off the highs of the session, but obviously we'll continue to see if they recapture that high that they hit earlier in the session. Adjusted EPS was $3.84 a share. Revenue, $766.49 million. Again, both beat expectations. They boosted their fiscal year 2025 guidance. They're now projecting revenue growth of between 6 to 7%. They're projecting growth in terms of profit, EPS growth to come in between 6.5% to 8.5%. The company talked about, the CEO talked about this, just seeing the opportunity in terms of hybrid, multi-cloud, and AI emerge, and they think that they have a competitive advantage. Again, they say that those are the main areas. Analysts, the way they're looking at this is they see, some of the strong leadership there. You are seeing analysts have to reset their price targets off the back of their results, especially you had, several analysts in the neutral camp on this, and they're having to readjust off the back of this.
Okay. If you were neutral on this stock, you have been behind. 159, the low in May. Trading 285 right now. Pretty good stuff. To your point, kind of a sleeper hit, leading the S&P 500 this morning. I see HPE moving, which kind of fits with this a little bit. That stock's up this morning as well. But the rally in ASML is also helping chips out. Corvo, little change too, even though it faded. So we've got a pretty decent little start, despite NVIDIA getting hit right now. F5, even if it's a sleeper hit, is still a hit and tells us that there is this kind of second, third wave of AI impact still happening.
Right, and it tells us that there's more meat on the bone. I mean, I think, the market, to your point, it seemed to be rattled at the beginning of the week by the threat of DeepSeek and how much did it mean. And if the numbers were as accurate, I mean, that remains to be seen if they were as accurate as we were led to believe, if it really was that, around 6 million spend on that, and then how much of that was actual chips that they were, legally exported chips. So there are some different factors there that have to be taken into account when we consider how meaningful of a threat DeepSeek is. And then you have analysts pointing out, okay, one, the market was probably oversold off the back of that just that knee-jerk reaction. And then number two, it doesn't mean it's a zero-sum game. In other words, this could give credence to the fact that there is more room for growth within this AI trade. And you're seeing that. And I mean, even when you had some of the analyst commentary or analyst expectations leading into the numbers, there was the expectation of a rampant demand, and you're seeing F5 as a beneficiary of that rampant demand.
All right. Big one. I like the way you put it. Meat on the bone of AI. Speaking of meat on the bone.
I know.
We got another one.
Brinker.
How about veal chop? We got Brinker, ticker EAT. I was goofing around so much yesterday talking about Maggiano's in the lead up to this stock. I'm like looking at it this morning. I'm like, wait, I thought they reported yesterday, but that was just the preview. They're up another 11.5%.
I know. This one is you're seeing a big move here in Brinker, and they did. I mean, it was led by Chili's in terms of the results, but you even saw growth at Maggiano's. Adjusted EPS for Brinker was $2.80 a share. Revenue was $1.36 billion. That beat expectations. In terms of their projections for fiscal year 2025, they're projecting revenue to come in between $5.15 to $5.25 billion. That's higher than what the street has been expecting. They're projecting adjusted EPS of $7.50 to $8. That's also higher than the view on the street. Comps rose, significantly. I was like, is this accurate? Comps were up more than 27%. The big winner there was Chili's. You saw comps for Chili's up more than 31%. Maggiano's increased by a single digit. Chili's, their growth you saw an increase in traffic. They talked about their investment in advertising. And I remember them talking about they were going to do more of that advertising, to bring more customers in. And it seems to work without affecting their bottom line in any kind of difficult way. And so you're seeing shares jump more than 11%. So a strong quarter for that. And Oliver, it reminds me of, we're starting to hear we heard from some analysts that are more constructive this year on the restaurant industry. And so obviously we're seeing this play out in the early innings. You saw Wedbush we talked to earlier this week. Now they are more constructive on QSR, so the quick service restaurants, than, say Brinker. I'd have to check and see if they have a note on Brinker, but it's not just Wedbush who is constructive here on restaurants, and they see solid expectations for the industry and solid growth for it. And then, even think about how the labor market is holding up. That bodes well. And then how inflation is overall improving. That bodes well for the restaurant industry.
Chili's, just a beast, I guess, and people haven't quite figured it out. I guess the cats on Wall Street haven't been eaten with Main Street, because there's 16 holes on this stock. Okay, and there's 22 analysts that cover it. There's a lot of analysts that cover Brinker. I mean, it's a pretty major consumer business. And look at this chart. This is almost as absurd as how they all hate Palantir. It's like hilarious because it couldn't be more different. But there's not a lot of charts that just go straight up basically and to the right, and nobody gets along for the ride. So I think these guys need to head down to their local watering hole and figure out, what's going on, because Wall Street's totally missed this.
They're missing this one. They did 100% miss this one. Wow. I mean, even when you widen out to a longer, several years long chart for Brinker, I mean, it's a big miss.
Yeah. My most frequent investing regret, not buying what I love, because I've always loved Chili's and Maggiano's. One time, my family, we were driving through, I forget what state it was, on a road trip, and we asked somebody if there's somewhere to eat around, and they said, there's a Chi-Chi's around the corner, a Chi-Chi's. And we were like, a Chi-Chi's? What are you talking about? Because the L is like the pepper?
Yes.
Yeah,
yes.
So running family joke on Chili's. Hey, tell me about T-Mobile real quick, Diane, because this one was a big winner for a while, but it seems like AT&T's kind of making a comeback.
They are, but T-Mobile did do better than expected, and in a similar kind of story in terms of the subscriber growth. Now, you did know this a little bit coming into it for T-Mobile in terms of what their projections were. So they beat on both top and bottom line. Adjusted EPS $2.57 a share, revenue $21.87 billion. Their guidance was strong as well. This is the best start to the year in terms of guidance for T-Mobile. They're projecting to add between 5.5 to 6 million customers this year. In terms of the last quarter, they added 903,000 phone customers. That beat estimates. And then in terms of internet customers, they added 428,000. That was better than expected as well. And they had, unlike the AT&T and Verizon, they had boosted their forecast for new customers off of their Q3 report. So at the time, they were the only one who had beat in Q3. So that makes sense why they were the winner compared to, say, AT&T and Verizon. But that last quarter of last year was really strong for all of them. And you are seeing shares rise nearly 7% right now.
Wow. All right, nice swing back to the highs from T-Mobile. I thought maybe the big AT&T rally was going to suggest that the legacy names were starting to recover some of their lost ground, but I guess right now the wireless companies are figuring out that consumers are willing to spend, maybe not quite as rigorously checking some of their expenses. So. Then again, T-Mobile's kind of had that deal perspective for them, so it seems like they still got a nice mousetrap they're using. Thanks, Diane.
All right, you got it.
Good stuff on the Movers. Host of Morning Movers, Diane King Hall.